Ladies and gentlemen, welcome back to Driven Wyld. Today we are talking about claiming a computer on your taxes. As a gig worker, many of us work after hours at home or spend a portion of our weeks working from home. Whether it is for administrative purposes, maybe you work a W-2 job on top of that requires a computer, or you're developing some kind of exit strategy. You have the opportunity to write off your laptop for business purposes. So in this video, we are talking about everything you must know about claiming a computer on your taxes, some of the ways you can maximize this benefit for yourself, and everything in between. But before we do that, let's go over a quick disclaimer. The content of this video does not contain and is never intended to be legal, business, financial, tax, or health advice of any kind. This video is for entertainment purposes only. It is advised that you conduct your own research and consult qualified professionals before applying anything you find online. Also, thank you to GigTax for verifying this information and making this video possible. How much of your computer's cost can you deduct? Only the business portion of the laptop is tax deductible. Many of us use our personal laptops to operate our businesses. That's okay. It doesn't disallow the write-off, but it does limit it. As an example, let's say you spend 4 hours a week working on your computer and 6 hours a week on Netflix every day, or some other computer game or streaming service, or whatever personal reasons you have for that. In that case, your computer is 40% used for business purposes, which means 4 out of the 10 hours you're using it is 40% of your time. This doesn't need to be an exact science, a ballpark will do.
But Joe, what if you're running a business where your work requires Netflix or a streaming service or something to that effect?
Well, it would still need to fall into the category of ordinary and necessary for business, but if you can find a way to make that work, run it through your tax professional and make sure it's all good on their end. Can college students write off their computers? For the purposes of education credits and tuition deduction, the cost of a computer qualifies as an education expense if it is needed as a condition for enrollment. This is important if you're a college student looking for a way to save money while also doing gig work for taxes. We made a few different videos on college students, gig workers, and how their taxes work. The link to our Financial Fridays tax edition, playlist, and podcast is going to be in the description. Feel free to check that out. Computers are no longer listed property. The IRS no longer considers computers as listed property. Listed property is anything that can be used personally and professionally, like your car. That said, the IRS does have special rules for them. Removing computers from that category did two things. Eliminate the record-keeping requirement. Taxpayers no longer have to maintain detailed logs in order to claim the deduction, and also can create conformity with normal depreciation rules, which offers more flexibility. Understanding computer depreciation. Normally, computers are capitalized and depreciate over the life of the asset as defined by the IRS. In 5 years in this case is the average life of a laptop or computer. Depreciation is simply a way to recognize the declining value of an asset. We generally talk about depreciation in the context of cars, especially as gig workers. If you purchase a car, the resale value of the car goes down incrementally every year. As the car takes more wear and tear, its overall function declines, and it gradually loses the ability to compete with newer models. Your computer is exactly the same way. Depreciation attempts to reflect this decline in performance by spreading out the original costs over its useful life. Not to mention the viruses accumulated over time by the companies that send out these updates. But this isn't the time for all the tinfoil hat stuff. When to deduct the entire cost of your computer? The IRS created a few different methods to accelerate the depreciation process in order to get their write-offs sooner. These methods mean essentially you don't have to bother with calculating depreciation at all, as long as your computer meets certain conditions. Deducting the computers costing less than $2,500. The IRS allows taxpayers to write off any piece of equipment that costs less than $2,500 in the first year using the de minimis safe harbor election. Remember, this is for the business portion of your computer. If you buy a $2,500 computer and use it for work 40% of the time, as we talked about in the example we used earlier, you can write off $1,000. Using this method, you're not required to depreciate it or report it as a fixed asset. It can be treated like any other business expense. The election needs to be included with your return, and it doesn't carry over from year to year, so it has to be made every year. Deducting computers with a Section 179 election. Section 179 was created to incentivize business owners to purchase machinery and equipment for their trade or business, including computers. In short, it allows you to write off as much as your purchase as you want in the first year, with the only limitation being the annual cap of $1,040,000, which I don't know if anything we use is going to reach that point, let alone anywhere close to it, but okay. This option offers the most strategic planning opportunities since you can choose either depreciate or not, depending on what makes the most sense for your situation. There are two major caveats to taking 179. You can't claim it if you have a loss, and it's only eligible for computers that are used 50% or more for business. If you use your computer for work less than half the time, you could still deduct it under de minimis or bonus depreciation. When to depreciate your computer. The IRS has made it pretty easy to avoid depreciating your computer. However, there are some situations where it just makes sense to depreciate it, even if you don't really have to. It also allows a little bit more flexibility. When you're doing tax planning for the following year, you can factor the depreciation into your bottom line, which can be helpful from a cash flow standpoint. Rather than upgrading the printer for the sake of a write-off this year, you could defer that cost, knowing that you have $400 of depreciation to use up. If you want to depreciate your computer, you've got a couple of options. By far the easiest is bonus depreciation. This feature of the Tax Cuts and Jobs Act, bonus depreciation is automatic, meaning you don't have to check any of the boxes or submit elections to get it. Bonus depreciation allows you to write off 100% of the cost of anything you purchased in the first year. Again, remember, this is only for the business use portion of your computer. This is probably the easiest method in comparison to the rest because all you have to consider is whether you need to claim the cost all at once or if you should reserve it for future years. Keep in mind, after the TCJA removed the rule that net operating losses, NOLs, expire after 20 years, it is less important to spread out your costs. An NOL is simply a business loss that can be applied against future profit. If you end up with $20,000 of net loss because you claimed a bonus depreciation on your new office equipment, you could apply that loss against any future net income indefinitely. The one downside to bonus depreciation is pretty unlikely to phase most freelancers that are self-employed or gig workers. But if you take the bonus depreciation, you have to apply it to all business assets in the same asset class. In other words, if you use it on your computer, which has a 5-year life, you have to apply it to your other assets that depreciate over 5 years. That includes cars, trucks, as well as more niche forms of your business assets like planes or cows. If you have planes or cows, I am shocked that you're even here, but that's a different conversation. Depreciation with Section 179. With the changes made to the NOL rules, bonus depreciation has made Section 179 basically pointless. There are a few situations where using a bonus doesn't make the most sense. However, you do have the option of depreciating your laptop or desktop with 179 as well. Let's say you outfit your new home office with $5,000 worth of computer equipment and have $3,000 of net income at the end of the year before factoring in the computer. With Section 179, you could zero out your current year's net income from self-employment and spread the remaining $2,000 over the useful life of the asset, which is depreciation. Of course, it's also important to make sure that you are doing this by consulting a qualified tax professional to make sure that it is even necessary to depreciate your computer at all and help you to find the best ways to capitalize on your tax write-offs that are available to you. That's where GigTax will be here to help. As somebody who ventured into self-employment via food delivery apps, the net income is promising. That said, you are also faced with challenges in navigating taxes as a self-employed person and transforming your gig into a sustainable business. GigTax was founded by Joseph Mayo, a seasoned gig worker with over 7,000 deliveries across 7 platforms since 2020. And they understand the challenges of freelancers, rideshare drivers, couriers, online sellers, and gig workers of all kinds. Their #1 online tax preparation service is designed to help you maximize your tax savings and save you time, energy, and money. Enjoy exclusive discounts on tax prep services as well as a range of additional benefits such as electronic filing, strategy sessions, year-round direct access to tax pros and financial partners, the client app and portal, tax planning services, quarterly tax reviews, all absolutely free and incredibly valued benefits when filing with GigTax. Book your free strategy session at gigtaxservice.com/drivenwyld and enter the code WILD, all lowercase, to access your special offering. Let GigTax simplify, educate, and support you on your tax journey, whether you are a gig worker looking to make some extra money or a successful entrepreneur leading an incredible lifestyle. Visit GigTax using the link in the description below and get started with saving the money you made as long as making even more along the way. Thank you so much for watching. I really appreciate it. As always, make sure to hit the like button, subscribe if you're new, and I'll see you guys next time. Peace.